Hello and welcome to Canada CPA Online Academy, Sharing the Wisdom. So we are doing a series on Canadian auditing standards. So please check out the playlist for Canadian auditing standards. We are covering one by one standard. So today we are going to cover CAS 250, which is consideration of laws and regulation in an audit of financial statements. So which laws apply and what this standard says about, we are going to see that today. Uh, So here it is. So CAS 250. It's a small standard, but an important one from some implication and procedures point of view, audit procedures point of view. So pay attention to that part where like in the application and other explanatory material section, you will find that they have given some audit procedures when there is a compliance and non-compliance, what to do and what procedures, specific procedures to be followed. So pay attention to that part. It might be important from an exam point of view, like say for day 2, you might be expected to write a detailed audit procedure. What happens if some laws are non-compliant? What would be the procedure? How would you check the compliance? So it could be an important uh, standard from that angle. So let's start this. Okay, so first we start with the scope of the CAS. So the scope of the CAS is auditor's responsibility to consider laws and regulations in an audit of financial statements. Now, what are those laws and regulations? So depending on the structure of the company, it could be very important. First step is which financial framework applies. So is it ASPE? Is it IFRS? Is it an international company? Does US GAAP apply? What are the consolidation rules? If it's a listed company, what are additional requirements? So all this comes under the purview of laws and regulations. And some would have just a procedural compliance, some would have the matters of compliance where there is a financial impact on the financial statements, like you have to provide for something or accrue for the liability, say pension, some different retirement plans where you have to accrue the liability. So in those cases, even if it's not um, uh, within your regular laws and regulations, it still impacts the financial statement. So it is a matter of importance. Now, what are the effects of laws and regulations? The provisions in some laws and regulations have a direct financial impact on the financial statement in that they determine the reported amounts and disclosures for an entity. Um, Yeah, so for example, like for banks, different laws for provision of performing and non-performing assets would require. So for a normal company, what you check for the provision for bad debts is different from a banking or financial statement where they deal with the financial assets. The requirements for non-performing assets are more specific, and you will have to conduct your audit procedures in more depth, in more detail, which are uh, in compliance with that, whether you'll have to check whether it is in compliance with that provisions or not, because that accrual or that provision would have an impact on your financial statements, and it could be material if it is miscalculated or not stated or not followed. So that is where you have to judge. Now why this is important is because, like, one part is that compliance of that procedure would have a financial impact. That is one part. And then other part is non-compliance may also have a huge impact on your financial statements. Like there would be fines, there could be some lawsuits going on where you will have to have pay a significant reimbursement, settlement, or a penalty of some kind. That then it would be a material impact on financial statement, and if it is not provided for, it could be a material misstatement. So that is why compliance as well as non-compliance, both the auditors have to check that whether it is compliant. If not complied, what are the implications? So both sides the auditor has to check. Now, what is the responsibility of auditor? Now you will see that here in the next part, you will see that the basic responsibility always remains with the management, those charged with the governance to have the compliance, so that they should have the standard internal control procedures. The staff should be trained where there are specific, say suppose there are safety procedures that need to be followed for certain industries. Then certain, say for some IFRS, the provisions are calculated differently. This rate needs to be applied. So staff need to be properly trained so that there is a compliance with the procedures. So all this comes a part of internal control, which is always the beginning point for an audit. So the responsibility of compliance lies with the management. What is the responsibility of the auditor? So the auditor's responsibility is identifying the material misstatement in the financial statement due to non-compliance with laws and regulation. However, auditor is not responsible for preventing the non-compliance and cannot be expected to detect non-compliance with all the laws and regulations. So what they're essentially saying is it is a due diligence, but it is not a, the responsibility still lies with the management to ensure that the compliance happens and the procedures are in place. Remember, audit is always a reasonable assurance. It is not 100% guarantee that every single um, uh, misstatement or non-compliance would be detected. So it is, the auditor would look for it, but it is not there. It is not, it cannot be expected that they would detect the non-compliance for all the laws and regulations. So that is made clear. Now the next part is like I was mentioning before, that it distinguishes auditors' responsibility in relation to compliance with two different categories. One is which has a direct impact on the different determination of material amounts and disclosures, and other laws and regulations that do not have a direct impact on the financial statements as such, but it could um, possibly run into material penalties if it is not completed. Yeah, so taxes, some superannuation, so all these things would have a direct impact where you have to provide a provision or an accrual in the financial statements. Now, after that, if we go to the requirement section, so auditors' consideration of compliance with laws and regulations. Now, this goes hand in hand with uh, the CAS of 315. So 315 is identifying and assessing the risk, because the non-compliance can have a material, it can increase the risk materially because of the potential nature of the fines or lawsuits and the contingent liability part of it. So the risk increases if there is a indication of non-compliance. So always it would be assessed in accordance with 315. So remember, like in some cases, if you have uh, indications where there could be some non-compliance, then it would be a good start to assess your risk. Then the next part is the auditor shall obtain appropriate audit evidence regarding the compliance of provisions of those where it is generally recognized to have direct impact on the financial statement. Now, how would you gather the audit evidence? So depending upon which laws are in effect, you will have to devise your procedures accordingly. Now, as I was saying, in the explanatory material, audit procedures. Yeah. So here they have given the procedures where there is an indication of non-compliance. So the following matters may be an indication of non-compliance. What would you investigate? So investigation of regulatory organizations, government departments, payment of finance. So whenever you are doing your GL scrutiny, identify if there are any legal expenses. Are there take a statement from management? Are there any pending lawsuits that you are not aware of? Are there some unusual amounts that are paid? What are those paid for? Are there any settlements or large checks that are paid? Check the legal expenses, any complaints, then any unusual purchases, any fluctuations. So be attentive and check that if it is related to some non-compliance and they are trying to correct that issue or not. So if in a case setting there is any specific condition of non-compliance, then your procedures should be specific and it should be pointing out to which uh, which specific procedures need to be performed to identify the non-compliance for these laws and regulations. Now, yeah, so auditor's consideration in compliance. So that is that. So obtaining sufficient appropriate audit evidence and conducting specific audit procedures is required. Then during the audit, the auditor shall remain alert to the possibility that other audit procedures applied may bring instances of non-compliance or suspected non-compliance. So one procedure may lead to another, and you should be alert that there is a possibility of non-compliance in other areas as well. So you should be alert. And after once you have identified, the auditor has identified that there is non-compliance, then what should be done? So in the first step would be to inform, communicate that to the management, to those who charged with governance, communicate with them, talk to them that this is what we have identified. So what are you doing to avoid the occurrence or correct the occurrence? So suppose this provision was missed to be calculated or booked in the so if the management says okay, we are ready to uh, correct that uh, correct that non-compliance, and we are ready to correct the mistake, so in that case the matter would be resolved. But if it is not, like there are potential implications, like there is a non-compliance and there would be a material misstatement because of that, then in that case it would lead to the auditor's judgment of whether it is a significant amount which would affect the material which would qualify it as material misstatement or not, and then your opinion might be qualified. So it could have the impact on the opinion that is expressed by the auditor. And in some circumstances where the activities or the non-compliance is criminal or fraudulent in nature, there might be some requirement to report that non-compliance to the appropriate authority. So it may be like to the police, informing to the uh, authorities. So there could be a requirement on that side. So that's it for this standard. As I was saying, do read this explanatory material. They have given some great points on the procedures and how to conduct some specific points related to the non-compliance. And that's it. Thank you. Thank you for today. Please like, share, subscribe the videos, and let me know if you have any questions in your CFE preparation. Thank you.